Hello everyone. This is the pre-market report video for today, 22nd February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Nifty opened a gap up of 50 points, but then till 2 p.m. it hovered around the 22,200 mark. Then in the final 1.5 hours, Nifty just gave up, and after 6 days of positive close, it closed negative 140 points. Mainly dragged by HDFC Bank and IT stocks. Here about IT stocks, we know it's because of the previous night Nasdaq negative influence. And HDFC Bank, there was no concrete reason for the negativity, but I can see lot of influence analysts like GQG Partners released the report that why they preferred SBI over HDFC Bank, and almost all the economic websites kind of released the comparison between the public sector bank versus the private sector bank, and now HDFC Bank haven't given negative returns compared to 3 years ago kind of. So I think at present both investors and people kind of hesitant to invest in HDFC Bank as they are anticipating the further drop. Anyway, irrespective of the Indian stocks influence, yesterday the final 2-hour drop was due to the global negative influence as the Japanese government downgraded their economy for the first time in the last 3 months due to the poor consumer spending. I mean, if required, please pause and have a look. I compared the Nifty with UK's FTSE and S&P 500 future market price rate of change. Here, dark blue is Nifty, yellow is FTSE and light blue is S&P 500. As you see, FTSE opened positive, but then S&P 500 dragged down as a consequence, and the influence of options algo trading dragged the Nifty then down. Moving on, sector-wise, media, IT, oil and energy were the biggest losers. Realty and PSU banks supported the market. After 2 straight sessions, FIIs turned net buyer and DAIs turned net seller. I mean, FII net bought shares worth approximately 280 crore rupees. However, after 7 straight sessions of net buying, DAI net sold shares worth approximately 410 crore rupees. This both FII and DAI data implying today, FII did the short covering and DAI did the profit booking. So this is what happened in Indian market yesterday. Now let's move to US market. Last night, if we see the S&P 500 price movement, that itself will tell the whole story of what happened. I mean, till 2 p.m. Eastern time, or we can say till the time of Fed meeting minutes release, for most part of the day, US market was under pressure. However, when the meeting minutes was released, S&P 500 completely trimmed its loss and moved into the positive territory. To be honest, in the Fed meeting minutes, there is no new thing, but still I will summarize it. If anyone fancy reading it fully, I will attach the link in the description below. Please have a go. First, on the positive side, I mean all the participants agreed that inflation was slowing down and it was under control. However, they were in the position where they want to proceed carefully and very strongly, unanimously don't want to cut the interest rate quicker, which most of us already know. But the new very important thing is, some FOMC members shown interest and want to discuss more in-depth discussion of slowing the pace of reducing the Fed's balance sheet, and also as per meeting minutes, FOMC members agree to have deeper discussion in the next March meeting. So in the next March meeting, we can expect Fed balance sheet related will be the key focus. Just for info, reducing the balance sheet means it's called quantitative tightening. It's an additional way Fed used to control the inflation by reducing the money supply. At present, Fed is reducing up to 90 billion US dollars every month. Anyway, overall for now, they want to pause the interest rate, but in future, if inflation increases or decreases, then they will have to act accordingly. So they want to keep the options open. In the end, Dow Jones and S&P 500 able to trim the loss completely, but Nasdaq haven't. Dow Jones increased by 0.13%, S&P 500 too increased 0.13%, but Nasdaq was down by 0.32%. Here, though market closed mixed and volatile, but still in case of US VIX, it decreased mildly and below 15.5. One more thing, Nvidia posted a phenomenal earnings results and even their future guidance was higher compared to analyst estimation. So, though it closed negative of near 2% during the market time, but after post-market offline, it increased near 8%. Regarding oil, Yesterday, there was a statement from Chinese government people regarding the policies to improve the economic situation, which in turn increased the oil and metal price. At the time of this video, Brent crude trading around 83 US dollars per barrel and WTI crude trading at 78 US dollars per barrel. Then coming to Indian areas in US market, more or less it just followed the Indian market. I mean both IT stocks, Infosys ADR and Wipro ADR closed more negative, whereas banks mixed. ICICI Bank closed flat positive, whereas HDFC Bank was negative, same as what happened in Indian market. However, because of this FOMC meeting minutes released almost near the closing time and the Nvidia's results were in the aftermarket hours, so Indian IT ADRs didn't have time to react for those. In fact, there is some positive info related to Infosys and Wipro, which we will discuss in a moment. About GIFT Nifty, today early morning at 3:30 am Indian Standard Time, GIFT Nifty closed at 22,080 mark. Here yesterday at the time of closing, there was no premium with spot market. On that basis, it's indicating 30 to 60 points gap up opening. As a summary, US market closed mixed, but the Fed FOMC meeting minutes was not as hawkish as it was expected. So even US fix it haven't increased much. So global momentum is okay. However, last night in line with that, GIFT Nifty indicating gap up opening. In addition, Infosys announced that they are going to upgrade the Dow Jones Wall Street Center, but the actual project worth detail was not shared. Then in Wipro case, they entered into a partnership with IBM for their AI adoption. So according to me, basically both news were positive, but please note, as I said earlier, ADRs haven't reacted positively for those. Moving on, as per stock open interest, Ashok Leyland, Aditya Birla Fashion and Retail, L&T Tech, Ramco Cements and NMDC got an increase in open interest along with a negative close indicates the short build-up. On the other hand, PVR Inox, MRF, Hindalco, Primal Enterprise and Berger Paints got an increased open interest along with a positive price close indicating the long build-up. About the things to look out, before our market hours, Japanese service payment data is due. Then during our market hours, first at 10:30 am, Indian service payment data. Then around 2 to 2:30 pm, all Europe, France and Germany's PMI data are scheduled to release. And after our market hours, first Europe's consumer inflation CPI for January month is due and the expectation is 2.8%. Then at 5 pm, RBI's meeting minutes is due and in the night, US PMI data, weekly jobs data and crude oil inventories are the important items we need to keep an eye out today. Coming to technical, the difference between the yesterday's intraday high and low was near 250 points and thus on the daily chart after 6 continuous green candle, Nifty formed a long red candle with a minor lower shadow. Here this candlestick we can say opening Marbosu and if combined with a Tuesday candle then together it formed a bearish engulfing pattern. In addition, daily RSI has a bearish crossover, all indicating the selling pressure in the higher level and a potential pause in the ongoing rally. So until yesterday's high 22,249 was not taken out, we can expect more consolidation for the near term. On the downside, Nifty has crucial support zone at 21,974 to 21,930, which coincides with 38.2% Fibonacci retracement level of the rise it had from 21,530 to 22,249. In terms of Bank Nifty, unlike Nifty, it closed with minor loss. However, on the daily chart, it also formed a similar candle as Nifty, opening Marbosu bearish candlestick with minor lower shadow, which kind of shows that Bank Nifty currently kind of stuck in a broad range 46,500 to 47,500 and the further upside is limited until it surpasses the 47,300 mark. The immediate support is at 46,800 and a breach below this level could intensify selling pressure, potentially pushing the index towards 46,500. Then regarding weekly options front, the maximum call option open interest was at 22,500 strike followed by 22,200 with similar new call option writing at the same place. Hence, this options data indicating even 22,200 as a strong resistance and once it broke, then the next one is at 22,500. On the other side, the maximum put option open interest was at 21,500 strike followed by 22,000 with new maximum put option writing at 21,500 strike followed by 21,800. Thus, this options data indicating the immediate support zone is 21,800 to 22,000 mark. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.